Welcome to Mogobe Nuggets of Wisdom podcast. My name is Mompoloki Lerumo Mogobe. Our objective is to enthuse, inspire, energize, and empower entrepreneurs and entrepreneurs of all stripes here in BW and beyond. We do so by inviting these entrepreneurs and entrepreneurs into our makeshift studio. Sometimes we call them to the restaurant, sometimes we go to our studio, and we ask them to share their experiential knowledge, their experiences and their expertise, and we ask them as many questions as we can, aimed at empowering you also as a viewer. Hello dear viewer, dear listener, my name is Mompoloki Lerumo Mogobe, the host of this great show of ours, this podcast, Mogobe Nuggets of Wisdom podcast. As always, we try to bring you life-changing business education, something you can take home and benefit from. And my guest today will do just that, add value to your life. His name is Isaac Molefinyana, and he comes from the real estate arena. And he's actually, as a matter of fact, the president of RIAC. So get ready to be feast on some new information, useful information that will benefit you. Welcome to the studio, sir.
Thanks for having me, Mr. Mogobe.
All right. Would you care to tell us a little bit of your background?
I was introduced to real estate in 2010 by Umesh Luna from Apex Properties.
Yes.
So I've worked under his leadership, and I was also mentored by Mr. Maje, who was the past president of Real Estate Institute of Botswana. So then I just now gotten to be appointed as the president of Real Estate Institute of Botswana last year. So I think on my journey from Apex Properties, I was there as one of the managers there. And then now I've opened my own company called Matchmakers Properties. So we are here in CBD Towers. So we do property sales, we do property rentals. But what I enjoy most, besides selling and renting property, I enjoy sharing my expertise, with Botswana, and just imparting the knowledge to those that are in need of, because the common thing that we are having is people always have the assumption that property is common sense. They will tell you all these myths that you can never go wrong with property prices will always go up. So all of those things, so as one of the spaces that I really enjoy, just educating people and sharing my knowledge with them.
We're going to dig into those concepts and those myths in a moment, but for now, tell us about your academic background in terms of your training, formal training.
Okay, formal training. I finished my metric. I went to be a doctor, I applied to be a dentist. Unfortunately, my acceptance at school, it came late. So I found myself, and then I went to Monash University in South Africa. Then I did my bachelor's degree there in marketing and management. And then when I was there, then my acceptance for dentist arrived. But I was already now enjoying that space of marketing, because there are always two salespeople. Either you have a natural salesperson and someone who's born to do sales, and someone who learned to do sales. So with me, I've been selling, even in our in family businesses, in Mosadi 20 when I was doing Standard 4. So I've been selling, I've been in the streets. I had a job when I was doing Form 3 in sales, so I've been selling through my whole life. So it found me. Sales found me, real estate found me. So now this is something that I've really, really perfected. And then even if you look at currently now in the real estate, all the real estate companies, that's for our company, I think this is our 4th year in practice. But then if you look at the work, we're doing, like the type of videos, our adverts, our flyers, we're on radio, we're on, it's the work that we do, you see. So I've taken that marketing background, then I've put it also in real estate. Wow. But I did my certificate also at Baisaho in real estate.
Oh, okay.
Yes, sir.
Wonderful stuff. You almost became a dentist. Okay, you are president of RIAC. Explain. RIB.
Yeah, Real Estate Institute of Botswana.
Okay, there's another one is called
RIAC, Real Estate Advisory Council.
Okay, tell us about those two organizations, and tell us about specifically the one which you are heading as president.
Okay. So we have an act that regulates the real estate industry. So it's called the Real Estate Professional Act. So the Real Estate Professional Act of 2003 is the one that says anyone who is selling, renting, valuing or auctioning or managing property should have this type of qualifications. So they're clearly stated on that act. So that act is being it's been taken care of by Real Estate Advisory Council. So they are the regulator. They make sure that the public abide with that act. So we at Real Estate Institute of Botswana, we are an advocacy body of the real estate professionals. So if now currently like we are having so many problems of we are having problems of fly-by-nights, we're having problems of banks doing auctioneering, deputy sheriffs doing auctioneering. We're having problems where the auditors want to tell our members how to value property. We're having so many issues. So these are the issues that I'm currently fighting for on behalf of our professionals. So RIB, Real Estate Institute of Botswana, is an advocacy body for the professionals. But for you to be a member of RIAC, you need to be a member of RIB first. So what we do at RIB, if you want to be an estate agent, you go to do your certificate in real estate. Then you need to come and write exams at RIB. So we set exams for you so that we just filter away and make sure are you ready for the market. So then then when you pass those exams, then we write now a letter to RIAC to say this particular individual is in good standing with us. They have proper qualification. We set a test for them. They've passed it. So then what RIAC now, when they approve you, now they give you more like we can call it a license now to practice. So now when you're going to the market now, you are a member of RIB and you are a member of RIAC. So this is the advice that I'm always giving Botswana Gere. It's try to at least work with a registered professional because should something go wrong,
I was going to ask you,
the person has professional indemnity and then there's somewhere.
I think this is something you could take advantage of this platform to clarify. What are the penalties for those fly-by-nights? What are the consequences for operating outside the framework of the Act?
I think, for me, as the current president of RIB, when you talk about fly-by-nights, I'm not really concerned about, that kid in Tlokweng who's selling a plot for 200,000. Because they're not eating much of, they're not disturbing the market that much, but what they're doing, they're tainting the market. They're giving the market a bad image.
Yes.
But my biggest worry is the people that are working against our government. Because now we have BRS that is supposed to be collecting the transfer duties, the property taxes, the withholding taxes, all these taxes that are being evaded, that are, there are so many tax leakages that are caused by now another part of fly-by-nights that I'm really concerned about, not kids on Facebook. And I'm talking about other professionals. We are having, lawyers involved in this, auditors, accountants, we are having banks. There's no property that can be transferred without a lawyer being involved. So the lawyer really knows exactly what is happening there. So I've been engaging, with a lot of the stakeholders, but it's a pity that Law Society, they refused to give me a meeting. But I met Bankers
Hopefully
Association.
Somebody is watching now.
Hopefully somebody, will take the matter. I've written them letters. I've sent them emails. I've called them. I've already exhausted all my forms of communication. Thanks for giving me this platform. Because I met the Commissioner General of BRS to highlight to him that the government is losing money on tax leakages, but we are concerned about kids on Facebook, kids on the advertiser. These people are renting houses for 2,000, 3,000. There are properties in the deltas that are being sold for 100 million. Where you have the owner of that property sitting in England, the buyer sitting in America, the money changes hands, nothing, not even one pillar comes to Botswana. How much money could BRS have collected? And that money could have been used for Mohemba project, could have been used to fix the potholes. So the government is actually losing millions and millions and millions every single day. So for me, this is my biggest concern.
Sort of transactions? How do you police them to ensure that there are no leakages?
For me, because I've just been appointed as the president of RIB, so this is one of the things that I'm currently battling. So I did meet all the stakeholders. I did meet BICA. I met even this still spill over even to the government. I did meet with the DPSM, the ones that employ government employees. Or now going to be having where we get to the city council, you get to the land board, and then you find that an estate officer at the land board does not have real estate qualifications. Then you look at the act. So like we did discuss these things, even with the council, because our council right now is losing millions and millions every month
Rates.
over rates. We did meet, with Mr. Israel there, we had very nice conversations. So I've been engaging with the stakeholders. So we did agree we're going to be setting up working teams and then, start, fixing these things. But the problem we're having is now the biggest person being the Law Society is not part of the stakeholders thing. So that is what is lacking. Because you'll be surprised that
Well, as a member of the Law Society, I promise you I will call somebody after this and inquire why they're not giving you a hearing. Now, let's deal with you now specifically. Your area of interest is multi-residential real estate, or real estate in the residential space. Why did you choose that area, and what exactly are you doing in that area?
It's not like it's an area that I've chosen. So what we're doing at Matchmakers Properties, most of the work that we do, it's on residential properties. That's an area that we have highly perfected. We do commercial, but this one, like it's on residential plots, selling houses. It's an area that we have really, really, really perfected.
And renting out?
Yeah, and renting out. So, I've been having, this, I see a lot of people do so many mistakes, when it comes to multi-residentials. So it's an area where I've been doing more teachings about it. So whenever I'm given a chance like this, I like to expand on it, because a lot of people have lost money by trying to invest in multi-reses. But they're coming, they're doing this thing with good intentions, but 95% of people that have done multi-reses are all making losses. Some of them, they've made 10 pull profit. Some of them are going to make their first one pull after 15 years. They don't even know it. So, for someone who hasn't started and, they're watching this show, I just like them, to watch this show until the end. So, because that is going to be unpicking this whole topic.
What do you think are the common mistakes that people make in this space?
I think with multi-reses, I always summarize this with three things when you are doing property investment. That the first thing you need to be aware of is your initial capital investment, your return on investment, and your break-even point. So when you have done these three numbers, then you can establish, am I going to make a profit or am I going to make a loss? And the most important thing also is, I'm going to make losses for how long? If I'm going to make profit, I'm going to make profit after how long? So I hope I didn't say it fast. Because when we're saying initial capital investment, I think with simple terms, is we're looking at what is the cost of you buying the plot? What is the cost of your construction? So let's say you buy your plot 300,000, you build your multi-residence with 700,000.
It's 1 million right there.
That's a 1 million there. I'm not even want to talk about professional fees, being your estate agent, your accountant, the guy, your structural report, your quantity surveyor,
Lawyers fees,
all of
transfers and so on.
So that you're looking at another 100,000, 150, but I'll hold it there in a minute. So then now you look at a guy, they're putting 1 million puller, they're doing multi-reses, they're putting 4 units, it's 2.5. So they're going to be collecting 10,000. But they put $1 million into this property.
Yeah.
So now where they usually get around this, like, let's say, okay, fine. No, my multi-res.
So that's 120,000 per annum. That's really 12%
so
yield, isn't it?
Yes, sir. So now
no,
the guy
10% yield. Am I right? Yeah. It's about 10-12%.
Yeah. So how they calculate it, they'll say, I have 4 units, 32 beds, 2.5 each, so I'm making 10,000 pool. You're making 10,000 pool. Okay, that's fine. Then I think we are not taught as Botswana, you don't calculate your rent per month. You calculate it per annum. So you have to say, I'm making 10,000 pula per month, times 12, that's 120,000. Then there, after you make your 120,000, then you go back and you say, okay, fine. What is my cost of my estate agent? What is my cost of, because BRS is going to need withholding tax from you. What is my cost of withholding tax? What is my cost of vacancy rate? Because then when another tenant moves out, you need 2 weeks to fix the place up. So if I'm going to have 3-4 tenants moving out, it means I'm going to lose out on almost a month.
You normally allow what percent for vacancy rate?
I think it would be dependent on the price range and also on the location. Yeah. So and then you deduct your tax, you deduct your vacancy rate, you deduct your estate agent fees, you deduct your maintenance fees, and most importantly, the one we always forget is the depreciation. And then you deduct your depreciation. And also, we also forget administration, you as the owner of that thing, because we're talking about the person who owns one unit. So most of them usually they don't have property managers. So you need to put petrol. The lock is broken, the sink is blocked.
Yeah.
You drive there.
Yeah.
You're using your airtime. You using so all this thing. You put it on percentages. Or okay, fine. I'll put my maintenance at 5%, depreciation at 5%, vacancy at 5%, my own personal time and my resources, airtime and fuel. I'll put it maybe at around maybe 3%. You do all this calculation. You find that 120,000 now comes to about you are left with 80,000. So now we go back to your initial capital investment for your plot and your construction. It was 1 million. You've taken a loan for 1 million, and then your repayment at the bank is 10,000. So now you're left with 80,000. Okay, fine, sharp. So now, because you are paying the bank 10,000 repayment, times 12 is 120, it means now you are making a loss of 40,000. Because now you have to pay the bank.
Yes.
So now you are running a business that is losing 40,000 every year. So you have taken a loan for 1 year. How long are you going to pay it? You're going to pay it for 15 years. So now we're going to deal with an issue of you repaying the bank and with the issue of you making 40,000 losses every year. And then when you really, it's a pity we don't have a board here. I could be writing the numbers.
Yes,
so
but we're following.
At the end, when you really look at it, when am I going to start making my first one puller? You're going to start making your first one puller maybe after 15 years. So then you ask yourself, am I now in a business where I'm going to make one puller after 15 years? So because if I'm having a customer come in to me and say,
have you factored in things like escalation?
I didn't even want to go there because it's really not important. Because with escalation, when we're talking about multi-reses have a price ceiling. So, because then if you're renting your multi-res 2.5, you put 10% escalation, it's going to 2.950. You put 10%, then it gets out of the price range. So me as a tenant on your house, you're escalating it that way, it's out of the price range. I would say, okay, fine. Mr. Harabakwena has built a multi-res next door. So because the property is new, he's renting it at 2.5. I take my clothes, I move to his house. You have escalated your rent, that's your business. So now, I'm even now giving you more vacancy rate. If now the gentleman also increases rent when I feel it has reached the price, because multi-reses don't have a longer price elasticity.
Yeah.
So there's only much you can stretch it.
So what do you advise Mr. Molefinyana to avoid this problem? What is your advice to counteract against this common mistakes?
I think the first thing has to be, why is that individual doing a multi-res? Because I think what we do as Botswana, you see when one person do something, we all rush into it. Right now, everyone is cooking, is making food in the streets. Everyone is doing that. And when you really sit down with them, okay, fine. You saw so-and-so cooking on the side of the road, so you are also cooking. So do you know the margins you're making? You know how many potato chips you can get from a bag of 10 kg? Do you know how many pieces of chicken you can sell? Do you know the profit margins? Do you know about the spices you need to put, the cost of oil, the cost of gas, the cost of delivering? So people get into these things without doing proper research. So that is the common problem that we're making. So I always ask a person, you want to do multi-res? Why do you want to do multi-res? First, why? You want to make money? I'll show you other ways to make money. Because if, for instance, you are buying land to build multi-reses, it's a whole different ball game. But this now boils down to the mistake because people want to invest things in silos. You know, the common thing I always like to tell people when we talk
silos.
So when we talk to people, talking about property investment, I always say to them, the mistakes that our parents did, we are now here repeating the same thing. I would have my mother having a plot, ko Sojwe, ko Molefinyana, ko Mogobane, ko Ramotswa, ko Letlhakane. But mama, why you have your property? No, I need to buy plots. I'm investing for you. This is your inheritance. So I always like to give this advice that you always look at your properties like joyous celebration.
Jewel celebration.
Joyous celebration. Like a choir.
Yeah, like a choir.
Okay, so your properties need to sing the same song. They need to be in harmony, they need to be in sync. So if I'm asking you, how does your property in Tlokweng uplift and grow your property in CBD? You need to have a very short answer for that. You need to say, because there are two ways to make money through property. It's either your rental income or your capital appreciation. So you need to say, my property in Tlokweng is benefiting my property in CBD because I'm releasing equity on this one. I'm doing further refurbishments on this one to increase it value on it so that this one in CBD can communicate with the one in Mopani. The one in Mopani, we go. So like it's one property need to uplift and grow another property. So if now you're having, you know, you're having one other property there, you're having Celine Dion, you're having Jay-Z and DMX, you know, and there's a choir. There's no sync, there's no harmony. So what music do you think is coming out? The music is terrible. So is your investment.
You equate property investment as in a musical performance.
Yeah, it is.
Yeah, putting it together.
Yeah, they have to sing the same song.
Yeah. And in terms of the clients who come to you, how do you get them? How do you get them mentally to realize this point, and how do you actually drive them to a point where their properties are now singing the same song?
Okay, I always start with, I'm always, you know, very brutal and very straightforward with my customers. I tell them, you know what, before I start helping you with putting your investment plan together, I'm not going to be dealing with your emotions. We are talking about money, and then you need to set out clear objectives. Or what is it that you are trying to achieve by investing in property? Because a lot of people, I'll tell you this as a fact. You know, even before, you know, we started this interview, I was actually checking something on Instagram. One of my friends just bought a house. Terrible mistake. The kid is 24 years. Just took a mortgage to buy a house for 900,000. For what good reason, I don't know. But anyway.
Why is it a terrible mistake?
Because she doesn't have an investment plan. That's why she bought this house. Because 90% of Botswana, the reason, you know, we are still between low income and just under middle income is because we don't have an investment plan. So because when you have an investment plan, you know the first thing to do, there's a sequence on how you have to do things. So if you are going to build your dream house before you invest, your dream house cannot get you your investment. But if you invest first, your investment will get you your dream house. So now this kid just bought a house. She'll never be able to invest because she's buying this property using her pay slip. Now she has exhausted it. So now she has bought this house. She's also staying in this house. But then when you ask about simple, you know, economic principles of assets and liabilities, if I pick the phone and call her, she will know what is an asset. She will know what is a liability. If I ask her about what is a good debt and what is a bad debt, she will know. So now, that's why I always bring people back to what are the objectives? What are you trying to achieve? So 90% of the people, this is what they're trying to achieve. The common mistake we are getting is the people that are married. Because then now, we are not marrying our business partners, we are marrying our lovers. We are marrying people that, you know, we love for it's feelings and emotions, and you can never put monetary value over feelings. So because we are not marrying our business partners, the decision we make, you get married, and then, you know, your wife, when she says to you, we get married, now as a man, I'm under pressure that I need to buy a house.
I think culturally.
Yeah, culturally.
Well. Yeah. In fact, even before you marry,
even my uncles.
Yeah, they'll say, where are you going to keep this woman?
Yeah, where are you going to keep this woman? So even now, you could imagine now I'm being advised about property by my uncle, who only have goats and this and then and wonderful house there valuing 20,000.
Yeah.
This is the guy who's giving me property advice. When you're getting married, you need to get these people a house. So the culture put us under this pressure. So you have culture, and then you have status, then you have pride, then you have ego, then you have the social media pressure, and then you have, you know, this disease of, you know, competing with each other and, you know, just trying to, you know, stand out. Because I see a lot of people, you know, they'll buy a house just to have the thing of saying...
It's a status symbol.
Yeah, status. You see that double story? That's my house. But the guy is paying FNB 2 million. He has a tenant paying 8,000. He has to top up his mortgage with 12,000 pula every month.
Makes no sense.
That's not your house. And you even find now these people even making a housewarming party in this house.
Let me ask you, how common is that? How widespread is this huge misunderstanding of property in terms of your observation?
The reason why, even with COVID, we are seeing so much impact of COVID in our middle class is because of property. So if right now, 90% of people that are employed, if they can tell you, no, I'm not worried about my job. Even if I get fired, I don't care. 90% of people that are currently employed right now, you fire them during this COVID, they're probably going to even commit suicide. But because we are never taught that how to use property, that with property investment, you can actually, you know, whatever salary you get. We are not never taught how to use our pay slip to invest. So that's the problem we are having, because also we are taught to be scared of money. I think it's one of, I don't know if it was cash flow quadrant where Robert Kiyosaki was saying, you cannot love something you're afraid of.
Yeah,
because we are taught to be scared of money.
All right, Mr. Molefinyana, let's take it a step further. Let's talk about investment plan. How to come up with a basic investment plan. What are the key cornerstones, and take me through an imaginary example of an ideal investment plan.
Okay. I think I never like to separate investment plan and the death plan. Maybe let me start with the death plan so that, you know, it echoes on the investment plan.
Death plan?
A death plan. So with a death plan, we basically mean the day you die, you know what is going to happen. You already have your medical, your life cover, you have your insurances, you have your society, you have your family, you know your family are going to contribute. You even have that WhatsApp group. You know, you have that, you know, funeral policy at work, you have that society at back home. So the day you die, even if you never owned a car, you're going to get buried, you're going to be riding in a car. So the day you die, you know what is going to happen. You have all these resources that are there. And you have actually spent so much money and invested on it. But when somebody asks you, so what about your investment plan? What are you doing in the next 5 years? Because then if somebody asks you, what are you doing in 2023 in June? You don't have an answer for that. It means you don't have an investment plan. Like I was saying earlier that, you know, your properties need to sing the same song. So when you do your investment plan, you say, you state out your objectives. For this is what I'm trying to achieve out of this investment. Either I'm trying to retire early and retire rich, or say I'm currently employed, I'm getting 20,000 pula salary. So the day when I retire, I want to retire with 40,000 pula income. So I'm going to be getting it from my properties. So that's how now you start your investment plan. And then you start, or your first year, then you can decide on my first year I'm going to be doing building and selling. Because currently on my pay slip, I qualify for 800,000. But I want to build multi-reses, or I want to do, because I want to do multi-reses, or those multi-reses, then I'm going to do sectional titles, and then I'm going to sell them. Because I really love that concept of sectional titles. You can actually make more money out of it than, you know, just doing the common multi-reses. So when you say, I want to build, because you have clearly stated out your objectives. So I want to create my own retirement package. Because, and then you already have your car loan, you have your personal loan, and a lot of people, you know, use the retirement packages to clear the car loan and the personal loan. Your retirement package is your retirement package. This is to reward yourself. You don't invest with your retirement package. So you clear out your objectives, and then you say, okay, fine, because I'm trying to raise 2 million.
That's a huge mistake that people make. Yeah.
So how am I going to make this 2 million? I'm going to make this 2 million by, on my first year, I'm going to do 2 houses, 2 projects. Build and sell twice on my first year. On my second year, I'm going to do the same thing. So I buy a plot for 250. I build it with 350. I've spent about 600, 650. Then I'm going to sell this house and make 200,000, 250,000 profit. So I'm going to keep this 200 after my costs. So my net is 200 on my first property. I'm going to do the second one. Now I have 400. But mind you, you still qualify for that 800. Yeah. But now only this time around you have 400. Yeah. You do another one, so that's your project for the first year. On your second year, you do the same thing again. It means now after 2 years, you still qualify for 800,000, but you have now 800,000 cash. So now you can get to a point that, okay, for now I have 800,000 cash, I qualify for 800. How do I now move up? Oh, now I don't have to go to the bank and ask the bank to buy me a plot. I'm going to use my cash to buy me a plot and get a building loan from the bank. Okay, then I'm going to put tenants. So now I have 400,000 left from my previous investments. I qualify for my 800. I've put tenants. How do I move on to the second property? Then that's
because
where now
you're climbing up the property ladder.
Yeah, so that's where now you apply equity release. That's where now you say, okay, fine. Now I'm no longer just applying for my next project. using my payslip, I'm going to use this property and use this lease agreement through the process of equity release.
Yeah.
So the bank would probably give me 80 or 70% of the rental that I'm currently collecting so that I can move on to the second property. So then now your properties are going to keep on multiplying. So you can only do that also if you've gotten the first property right. If your first house is the house that you are staying in, it's not an asset, it's a liability. So you are never going to be able to follow through with what I'm trying to say right now. So then that's what you'll be doing on your investment. But you know what to do when, and then you know what now you do build and sell, you buy, you hold, you buy, you rent, you release equity, and then you expand, and then now you move from your payslip, you set up a real estate company, then you move now this property is under the company so that you can enjoy the benefits of
just
tax
on
planning.
That point, I have this perennial argument, and if you watch shows like Bigger Pockets podcast, it's always a case of being a flipper versus being a buy and hold strategy. The argument being that flipping is always temporary, but buy and hold is forever. What do you advise? From what I heard you saying, you seem to be encouraging a hybrid approach. Both flipping and buy and hold. Am I right?
You are right. But with flipping, you know, we can either do build and sell and flipping on our initial stages. It's something that I don't really encourage, you know, when you're already settled and stable. You can do it maybe to spin, but for other reasons. Because even today, like we just had another house and in phase 4, the house is valued, I think, about 1.3 million. It's been auctioned for 900. So that's a house that, you know, if you want to flip, you can get that house, put a swimming pool, chop, because now you are buying it 300,000 below the value. You can now, you know, put the swimming pool, put nice walls, and put another 50, 60,000 on it. You put it immediately into the market. So for me, that is the type of flipping that I encourage. I don't really encourage when, you know, when the property is already dilapidated and then, you know, you're trying to do a structural report and then, you know, then now
it's really you enhance the value and then put a tenant for a higher amount. That's the kind of flipping you want. But at some point people say that, but I don't have cash flow and I don't have
not to hold when you're flipping. Like with this auction property, you buy it at 900,000, you fix it up, then you sell it immediately. If you buy it today, then tomorrow if I'm selling it for you, then it means we are already going into transfer of property. So it means, so the transfers are going to be done simultaneously. So in a period of 3-4 months, the transfer would be done at dates. So you could have actually made 400,000 in 4 months without even lifting your finger. So when you buy property from auction, you increase their value, you put them immediately into the market. That is the kind of flipping that I'm encouraging.
Okay. From your studying of the Botswana market, do you think that opportunities for wealth creation are ripe? They exist in the Botswana market, in the property market?
I think we are beginning to understand real estate as Botswana, but we came late to the party. That's why, you know, I think even, you know, this week there's been, you know, fights on radio about, you know, I'm from Ramotswa, about, you know, about our fight there with Baliti and
congratulations for winning that case.
So we came late to the party. We never understood, you know, the real importance of land and investment. We always, I think our parents, most of them, they were once like it. When you go back home, you need to have a family house, man. You can't just be in the city and now when there are weddings, there are funerals at home, you are sleeping in the car. So I think our parents, they were investing now in this rural location. They never understood, you know, the importance of location.
But I'm asking you a question. Do opportunities for wealth creation exist now that people are woke, people are waking up?
In this current market? I think in this current market, you know, the potentials are still there. Because even right now, you know, when people are telling me about COVID, I say, you know, on every pandemic, new millionaires are born, new billionaires are born. So you don't stand here and say COVID, you know, has affected the market and whatnot, I'm giving up. Just go on the other side of the fence. Because as much as COVID is affecting people on the other side, there are people that are actually flourishing right now because of COVID. So go join them. That's all we have to do. So I think one of the things that, you know, we can, it's only that we don't have a culture as Botswana is working together. You see, I think when they were doing this building in CBD, I think, the one where there were like 20 ladies that, you know, came together to build this building opposite Massa. So I think concept like that, you know, because they're not, now it doesn't become too capital intensive. So because we still have so
exponential.
many exponential. So we still have so many proper land pockets that, you know, with the projects like that, we can actually, do more. Like it's this, because our playing field is level. The barriers to entry in Botswana, they're limited. Like when somebody says, I'm relocating, I'm going to Joburg. They're the barriers of entry. It's survival of the fittest. Here, it's, you can still go to land board and complain, go to the city council, and you can't do that in Joburg.
Now, what about graduating now from multi-residential or residential to commercial? What are your views on that?
No, okay. I think because now we're talking about the property investment, I always tell people that property is not a get-rich-quick scheme. If you think you're getting in property investment because you want to make money today and you are in the wrong business, you go sell something else. Because then, like we were saying about, that 5-year plan where you're doing flipping, you're doing building and selling, build, hold, and rent, release equity, let them multiply.
Yeah.
You need to first perfect and understand, the residential market before you can move to the multi-residential market.
Yes.
Then you can be introduced to the industrial market. From industrial market, then, because industrial is very, it's minimal work. Then you can only now try on the commercial. But commercial also, you start with small, office building, small shopping complex. You're not about to be doing a full-blown, shopping complex. Because if you haven't, perfected and corrected all the mistakes from the residential, the ones now at commercial, they are so complicated that even a lease agreement just allow commercial is so complex that if you cannot even understand what is happening in the residential market, you can't. So with commercial, I would say you give yourself maybe 5 to 7 years, then you can move to commercial. But you don't, buy your first car as a Range Rover, a Mercedes. Otherwise.
So you think of commercial as a Range Rover, really?
Yeah.
Compared to Corolla, which is.
Yeah. So you start with so that you learn all this, because if you haven't, understood your tax planning, when you find Donald Trump, your Robert Kiyosaki saying, I've paid zero tax, in the past 20 years. And then you find like the richest guys are not paying tax. But then you find, this Molefinyana guy, you're getting 10,000 pila salary. They hate you with pay as you earn there at, I don't know, maybe it's 3,000 below. So you even pay more tax than the richest guy. Because you don't even know what is tax planning. You don't know what is a tax year. You don't understand all these things. Some guys now, when they know what my tax is due, you don't know I need to invest in this so that I reduce my tax.
Do you see the industrial market as separate from the commercial market, or you see them as one and the same?
They are complementing each other. Because even right now during this COVID era, where now we're having a boom of there's so much movement in the industrial side, because now the guys are manufacturing masks. They are storing, the sanitizer. They are doing this, but they also need a commercial space to operate, and they need a warehouse for storage, for supply, for distribution. So we are having all of these things. So they complement each other.
Yeah, just speaking for ourselves, I've found that our industrials, in other words, warehouses, have always found tenants over the years.
Yeah.
We never experienced vacancies in that area.
So now with the growth of the industrial, we are seeing now another growth of, people asking for storage facilities. Because now, during this COVID era, a lot of people are working from home. So now the offices are vacant, so people are reducing their workspace. And then now, because they are going to move back, eventually, so they need storage. And then also because there are so many things that we are importing. So now there's trucks. We are seeing I think we've been seeing a lot of, high demand of spaces for parking trucks, for parking buses that are complementing the industrial side. So it's another now whole different market where people with farms can actually benefit from this.
Absolutely. Yeah. It's a dynamic market.
Yeah.
Now, people always say in property, intimidated a little bit by the funding and the financing aspect. How do we position ourselves to be attractive to funders as property investors, especially when we are starting? How do we make ourselves attractive?
I think it depends either are you employed or you are unemployed. If you are employed, I think the first thing that I'll tell you is don't buy a car before you invest in property. Like I was saying earlier on with the equity release.
Don't buy it brand new. Maybe get a phone call.
Yeah, because the moment you get
car period or get a cheap car.
Because the common thing we are seeing, especially
I want you to clarify that one.
The common thing with with government employees that we have seen that have really set them back They take a personal loan, they take a car loan, then they want to buy property. But you can actually get all these three things
in a different order.
Using the same pay slip in a different order. Because when you take a personal loan, it's unsecured loan. You're taking your car loan, it's also unsecured loan, and the interests are very high. So you can actually buy your house, release your equity, buy now your car cash for 30,000. You'll get your dream car after you are done with the investment.
How is that different from that young lady who's getting her own house? Or she already has gone it the other way?
You know, I think also this...
You need to clarify
this
that.
is also maybe dependent on the objectives and, you know, the will of people. You know, I had this customer, when we having this conversation, she said, you know what, Isaac, you know when you're saying this multi-res, then we release equity, builds another one, then they're going to keep on building each other and I can make 100,000 in a month. I know you're right, but what am I going to do with 100,000? That's a lot of money. You know, I just want something, you know, I just want to survive. And because some people, when they have their own 2.5, that's Molefinyana car, they're happy. Some people want to own a block, some people want to own a city, some want to own a country. So if, you know, you just want to, you know, because also these things are very stressful. But if you know, like you can't manage all of those things, at least take care of your pay slip. But if you're unemployed, you know, a lot of people that are unemployed, they want to buy property. That's always said. You know, if you're employed, take care of your pay slip. If you're unemployed, you have properties. We need to, I think, as Botswana, stay away from this thing of collecting rent from our tenants. Like, it's okay, fine. You pass by after work, it's like, it's, Malaysia, give me the rent, give me the rent, give me the rent. You put it in your pocket. Open a company. Let your tenants pay you in the company so that when you go to the bank and say, I'm unemployed, I have these properties that are collecting this rent, here are my lease agreements, here are my financial reports, here are my management accounts, then you are bankable. Because then you find someone who has houses in Mogobe, they're all over, collecting over 50,000 rent, they cannot even get a loan for 200,000 because their books are not in order, because we are not taught. And you could imagine now how much tech this person is playing. Because you don't have an accountant, you don't have a lawyer, you don't have a tax planner, you don't have an estate agent. So you are making so many mistakes because we want to use common sense in property. So
advice, if I get it correctly, is that get professionals. Get professionals around you so that they can put things together in terms of the paperwork for you to be attractive to funders.
You have to be bankable. If you are not taking care, because you can earn 30,000 pula, and the bank will refuse to give you a loan for 1 million, because you are not bankable. The way you know your relationship with money is poor, and you know, and just generally as Botswana, we have a very poor relationship with money because we are scared of money. Because even you know when a job advert comes out, it would say we need a sales executive. The salary is 10,000 pula. Month end when you pay them salaries, the same guy is hiding his pay slip. But we know you are getting 10,000 pula. It was on the job advert. Why are you hiding your pay slip? Because the pay slip is written private and confidential. So that thing is a mind thing that, you know, to control people so that we don't have a good relationship with money. And if you are scared of that money, the money won't love you because you don't love it. You are also scared of it.
Okay. Now, being in this market for this long, what are the ideal locations to look at for property investment in this country?
I think with the property investment, I'll just, you know, talk about residential market. I think it would depend on exactly what. Like it's if maybe you want to do land banking. If you want to do land banking, you want to buy a plot, hold it and release it after a couple of years. I would say Gaborone North is the best bet. Because plots in Gaborone North started at 50 pula per square meter. They went to 100, we took them to 150, 200. Right now we are at about 750 pula per square meter.
Even going further beyond Mamashia and so on?
No, Gaborone North,
yes, being
a freehold. So Gaborone North is an area that is very good for land banking, even for equity releases and capital appreciation. Like it's very good. The values are growing.
What if you go further?
If you go to Mamashia, you're on tribal land.
Yeah.
You're on tribal land.
And what's wrong with that?
In Mamashia, unless you are getting now into industrial, not residential.
Okay.
Yeah.
Because it's been rezoned, isn't it?
Yeah, it's been rezoned. So if you want to do land banking, I would advise you go to freehold. But if you want to do rental properties like multi-reses, I would say Mogobe, Tlokweng, those are the two best places to do your multi-reses or buy and sell. The next two options would be Mopani and Odi.
What do you say to those who say prices are too high, the market is overheated? I mean, you find sometimes, I think if I'm not mistaken, block 10, you find a plot of 900 square meters going for 800,000.
It's 1,000 per square meter.
Yeah.
It's supply and demand.
Yeah.
It's supply and demand is market dynamics. We can't do anything about. You can't fight the system. Yeah, you can't fight the system, because then also you ask yourself, if the plot is 800 square meters and block 10 is 800,000, why do you want to buy in block 10? Why? Supply and demand. And what created that demand? That's, is the illusion, and it's and also the illusion that is there. It's just a facade. Like there's what's really value. Like it's like partial in extension 11. A house in extension 11 is valued 11 million. The same house across the road is valued 600,000. Across the road,
not the same quality, not the same quality finish.
Same plot size.
Oh, no, you mean the same plot size?
Even same plot size, same type of houses. Maybe this one in the partial is new. The one in extension 11 is even dilapidated. Very old structure in extension 11. We will never sell that house for less than 5 million. But the one here newly built in partial, we are going to be negotiating 1.2 million.
What's the reason for that? Isn't there a bit of schizophrenia in the market?
I think it's a summary of location. We can't fight the system. I always we don't have to invent the wheel. So if you want to invest in property, you want to build and sell properties, just go where the market is vibrant. So it's we have so many people, especially people from the north, they want to invest in Palape. It's like Palape, there are shopping malls coming up in Palape. This is coming in Palape. This is coming in Palape. I'm like, that is just a fugazi. It's not, what is the real tangible? Yeah, there's no tangible value. You can't even see it. It's there, but it's not there.
I thought the market is becoming vibrant
in Palape.
Yeah.
No.
It's a facade.
It is.
Explain that to me.
Because what developments came to Palape? Shopping malls. Who works in shopping malls? Our little sisters, and how much are they getting? They're getting 1.2. So how does that even change the economy of Palape, when now even the buying power is still at 1.2?
So what should make a difference is what? Industries.
If Palape was being changed into an industrial area where you are having technicians and professionals that are getting 40, 50,000 salaries, then we would say the income here per square meter of people staying in Palape, they're getting on average 20 to 30,000. Then you would say Palape is booming because there's buying power in Palape. There's no buying power in Palape.
Yeah, because I find that Maung is even much more vibrant than Palape in terms of tourism activity. I mean, pre-COVID, before COVID. And still on locations, why are our towns in the north doing so poorly? Francistown compared to Gaborone. What's the reason for that?
I think the same thing that hit Francistown is the same thing that hit Piquet. Because when the mines had closed there in Francistown, I even had a friend who had a block of apartments that BDP was occupying. Very sad. The place used to be very nice. So now, because that's the same thing I've been telling people about investing in the mining towns. But people don't, because people, they're also speculative, investors. The guys that just want to make money right now in quick cash.
Yeah. They'll
tell you, I want a plot in Tlhakan, I want a plot in Jwaneng, I want a plot in these areas because there's a new mine being opened here.
Yeah.
When that mine closes, the same people, because they're speculative investors, they've been making this income, but they haven't even started making that profit because they haven't even looked at what is the return on investment, what was the capital investment on it. So now, they're left with the red coal. Because Francistown, when the mine closed, because then if you look at the population of Francistown and what really business activities are happening in Francistown, it's the same thing that I'm talking about Palape, where you are having Dulux there. It has employed about 4 or 5 people. You are having Boto, you have like 10 lectures. What else are you having? You're having Tapama. Those kids are probably getting maybe 2,000. So where is really the business activity there?
You have the university there.
Yeah. Then you have maybe a couple of banks there. Those people, they are not even from Francistown, so they're investing somewhere else. So then you have the guys from BDF there. They're already now indebted on personal loans and car loans. They actually want us to go to them and help them with getting out of debt and starting to invest.
So that means the best place remains Gaborone by far.
Yeah.
But that's not proper in the long term. I mean,
But
it's not ideal.
It's not in our honors to invent the wheel
Yeah.
and change the world.
Yeah.
If this is the
We have to deal with what we find.
if this is the status quo and you want to invest, it's not your responsibility to say, look, I'm going to turn Mahalapi around. There's big opportunities, Mahalapi. No, it's not your responsibility to invent the wheel. Go where the money is. When Mahalapi fixes itself, you go to Mahalapi.
Okay.
Because we are in a capitalist market.
Yeah. I want to talk about your business specifically. How many people do you employ at the moment, and what are the prospects? This is the crystal ball time now. What are you looking for?
No,
what are you aiming for? What is the vision, and so on?
And you know, the feedback I'm always getting with my employees, they always say, you know, you want us to be you. You want us, you know, to sell like you. Because, you know, for me, like, it's because I sell everything. Like, I'll sell the pen, I'll sell this paper, I'll sell everything. So it's like you want to be like me. So I think, you know.
And how do you answer them when they say that?
I always say, yes, I want you to be like me, so that when you fail, you can do at least 60, 70% of what I can do.
Yeah.
Then I'll be happy because you'll be close to meeting your targets.
Yeah.
So I've employed the youth. I've employed graduates. You know, I have another kid at my office that, you know, she came for internship last year. Her internship has finished. They're closed at school, so she's doing part-time at my office. I've employed about 10. I've employed 10 youth in my company. Yeah, I've employed 10 kids at my office. Some of them fresh from school. Some of the one guy there at my office, he did IT. I just took him from IT. You know, he went to school in real estate. I taught him everything. Right now, he's one of our top sales guys. I've taught him from scratch. But the vision that I'm trying to create, you know, with them is, you know, like, you know, one of the good guys, like it's Franz, that, you know, he used to, you know, say to me, it's like, you always need to highlight to your employees that they don't work for you. They're working with you.
You always emphasize
you have created a platform, and then they are working on the platform. So I think with me there, I'm just trying to like empower these kids and uplift them. But I've also, you know, make it very clear to them that I'm not going to make them rich by giving them, you know, a salary. So that personal development also is important. Because then also I've shared them a vision with them, because I have another guy at my office called Hendrik. He sells our plots in Gaborone North. I told Hendrik that one of the things we need to do after this winter, we want to open a branch in Gaborone North. We're going to employ 3 more other people under him. So he's going to be the branch manager there and have 3 people under him. And then we'll give him shares maybe in the future. So those are one of the things, like, as when I'm sharing my vision. So then I'm sharing my vision with them. But in the next 3 months, short term, we are opening a branch. You are becoming a branch manager there. We are giving your own team so that you can now learn how to run a business. You're going to be running your expenses there, your costs, your taxes, everything there. So then we're doing the same thing with the lady who's doing residential sales, residential rentals, and commercial. So that then I'll give them room for expansion and growth, because I don't want them, you know, I'm teaching them and they're also thinking, hey, you are making this guy rich, let me go open my own, because they're all going to make mistakes.
Yeah. So then you partner with them that way. Okay. This is a part of the show when you get to ask me a question, sir. Shoot.
Okay. I think the other one I want to ask for the camera, but I think maybe what I'd always like to know is, I think I've been getting this thing, you know, from also as when I became the president of REEF, that we are not accessible. We have knowledge, but we are not accessible. Because even right now we're doing this podcast. You know, someone is really interested and it's like, I wish I could ask you that. I guess it's not live, they cannot comment right now.
Yeah.
They have so many questions, and then I think it's what I'd like to know is from your end, like, it's maybe how many people you are currently mentoring and how accessible you are. Because I know from my end, look, I'm really, really accessible to, and now it's a pity that I'm the president and I have students that are studying real estate. I have to be accessible to them, and I'm currently mentoring another 2 more kids. And I'm so I don't know, maybe from your end, because
look, it's a challenge in terms of mentorship. I've opened a mentorship program, and we have currently 2 cohorts, and the plan is to have more over time. The first cohort is 6. I find that the mentorship is effective when it's concentrated, not too many people, and you want to be sure that really you have the people who are committed and interested and really anxious to learn or keen to learn. the way I look at it is that the people that I want to mentor are people who have that same feeling when, I don't know whether it was Socrates or some philosopher who pushed a student under water, and the student was fighting for air, and then he said, if you look for wisdom the same way you are looking for oxygen, that's how you become wise. So I tend to want to look for those sort of mentees who are as that anxious to learn.
My prerequisites are I always say, before I can even talk to you about anything, first your mindset, we need to work on it. I need you to go watch either the movie or read the book of The Secret.
Yeah.
To lay the foundation. I cannot talk to you when you haven't read Rich Dad Poor Dad.
Yeah.
I can't talk to you when you haven't read Napoleon Hill, Think and Grow Rich. It's like those are the foundation things.
Those are basics.
Basics things
I do the same.
They set the tone of how I can relate with you.
Yeah, some of them won't even go past the second page, and that makes it easier for
because they're entitled. They just want to take.
So I also make their mind pay a little bit. It's a nominal fee. I think when I last checked, it was 4.5 over 6 months, just to show that they're committed. And then, of course, there's a whole bunch of other mentees in the context of Angel Network Botswana. There's a whole bunch that we're mentoring directly and indirectly. There, the numbers are not limited because it's an entrepreneur who has an investable idea, who has to take that idea to market. So they would come to us, and we take them through those steps. There are people who do the financing side. Me and Mr. Gurumuti will be doing the mental and the psychological side to get them right. So the numbers are unlimited at the moment, but we are working on those startups. We just invested in the first 2, and we're growing from there. So I hope I've answered your question.
What type of because you are the different. I know, like you're in law, you're in property, you're doing so many things. So like I don't know which people are you currently is you mentoring on what field? Yeah,
that entrepreneurship in general. I mean, the one startup is involved in e-commerce. The other startup is involved in property. There are others. So it's multiple areas, as long as the idea is investable and workable, because there are people from different, in A and B, there are about 40 or so investors. So they're in different fields. So it's easier to find the right person
because I think even the reason I'm asking this is because I think even with me, I'm very good with sales. I sell very fast, and I sell a lot. So because that was my strongest quality. So when I was opening also Matchmakers properties, I did not understand a lot of things from HR, from accounting, from recruitment and firing and hiring, and then how to take care of the balance sheets and how to be bankable. So I think it's not one of those common mistakes that I think a lot of entrepreneurs, what does annual returns means? How do you do your tax planning? How do you have an investment? Things from the company. So there are things that I learned, on the way. So I've made mistakes and I've learned from them, and then and I always having this thing that I don't want every given chance that I get to tell another person who is starting that business, hey, I did 1, 2, 3 mistakes.
Yeah, you
be aware of this, but
you're sort of pushed to want to empower others. But time is not on our side. Look at that camera. Leave that entrepreneur who might be watching with 1 or 2 words of wisdom, of encouragement.
All right. No, I think I'll just keep it brief. I would just like to say property is not common sense. Real estate does not always appreciate in value. That is a myth. Whenever you want to deal or do anything in real estate, make sure you are working with a registered professional, with an institution RIB, an institution RIAC. So you need to be working with a registered professional because this is it's a professional industry, just like lawyers and engineers. And most importantly, whatever advice I think you're getting, get it from someone with experience who has done the mistakes before, from the business point of things, and then you can never be smart or be better than anybody. You are only as smart as the topic you are an expert in. Other things, you need to talk to other experts to give you advice on. Thank you, and thanks for having me.
How do they get in touch with you if they want your mentorship, for instance, or they want to use your services? Where are you accessible?
No, right. No, I'm very. They can get in touch with me on my contact. My cell number is 116388. Our landline is 391-9971. We have a website. It's www.mmp.co.bw. On Instagram, on Facebook, on Twitter is Matchmakers Properties. But we are currently located in CBDI Towers, floor 11, Unit C.
You've been a wonderful guest. You're really on fire. Thank you very much.
Thank you for having me, Mr. Mogobe.
Okay.